I welcome you to this session, and in this session we will be learning about the warehousing and insurance. Under the topic of warehousing and insurance, I will be taking you through the description of the institutional infrastructure development for insurance and warehousing, and we will be also discussing about the development of warehousing facilities in the country. The country loses large quantity of agricultural produce in the absence of proper storage system. So, the storage system is very important, and the storage of farm produce adds to the farmer's income, because only when the produce is stored well, then the quality of the produce is maintained, and he realizes a greater income when he takes it to the market. It also stabilizes prices, reduces losses of the produce, which has the potential to meet the food security of the country. Understanding all these good things about the storage and the need for the storage, GOI is nowadays creating storage infrastructure and also promoting the private participation to set up storage structures, because private participation is also important, because a lot of money can come from them and the technological input can come from them. Warehousing, if we want to define it, it is a scientific storage structure constructed for the protection of the quantity and quality of stored products. So, it protects the quantity and quality of the stored products. The warehouses, it also protects the produce stored against rodents, insects, pests, and against the ill effect of moisture and dampness. So, the quality of the produce is maintained, and high quality of produce when it is taken to the market after the harvest, after 2-3 months, then the farmer realizes a better price. So, therefore, warehousing is very important. The warehousing, it serves a lot of functions. One is the scientific storage. So, the warehouses, the produce is stored scientifically at a right temperature, and right moisture is provided to the produce, and therefore, the quality is maintained, and therefore, the right price is received when it is taken out after storage after a period of time. It also helps in financing, because the warehousing also helps in financing, because the banking sector is able to finance. When the farmer has kept the produce in the warehouses, the banking sector is ready to finance based on the value of the produce which is kept in the warehouses, because the bank is assured that the produce is there, first of all produce is there, and then the quality would be maintained, and the farmer is going to realize a higher price. It also helps in price stabilization, because just after the harvest we know that in agriculture a lot of produce comes in the market, and that leads to glut in the market, and there is a fall in prices. But if part of the produce is stored in warehouses, if we have good warehouses and infrastructure, part of it is stored, then that leads to the glut is not there, and the price fall is not much, and therefore, that leads to a stabilization in prices. Then market intelligence, the warehouses also provide the market intelligence to the producers who have kept their produce in the warehouses, and based on the market intelligence, the farmers can take the produce whenever the right price is received in the market. The government has created a number of infrastructure for warehouses, and foremost is the Central Warehousing Corporation, which has the Central Warehousing Corporation provides safe and reliable storage facilities for about 120 agricultural and industrial commodities. So, large number of commodities can be stored in such warehouses, and the area of operation of such warehouses, Central Warehouse Corporation, includes centers of all India and interstate importance. So, they acquire and build godowns and warehouses. The CWC acquires and builds godowns and warehouses. Storage of agricultural produce like seeds, fertilizers, and certified commodities for individuals or cooperatives is possible in such warehouses. It subscribes to the share capital of state warehouse corporations. So, these are various functionalities of the Central Warehouse Corporation. Next comes, as far as the infrastructural facilities of storage is concerned, rural godowns. This is a very innovative scheme which has been launched by the government of India, and the purpose is to establish, the aim is to establish national grid of rural godowns all across the country in the rural areas. So, the network of rural godowns in states and in territories is proposed to be set up. This will provide the storage requirements, it will meet the storage requirements of small and marginal farmers, because it will be located right near the farmers, and therefore, even the small and marginal farmers will be having an access to store their produce, because these bigger warehouses, they may not have the access because not much of quantity they have, nor the transportation cost is involved. And if it is smaller godowns are created in the rural areas itself, the farmers, small and marginal farmers, could also have the access. The cost of construction of rural godowns is subsidized to the tune of 50%, which is shared equally with the central and state government. So, only 50% of the cost needs to be shared by the central and state governments, and the remaining 50% capital is arranged by the implementing agencies such as the Cooperative Marketing Society by way of taking loans from the commercial banks. So, the implementing agency, suppose it is the Cooperative Marketing Society, because they have these societies are located in the villages and they intend to create a rural godown. So, they can take, so whatever is the cost, 50% of the cost of that they need to take the loans from the commercial bank, and rest 50% comes from the central and the state governments, who are providing it in terms of subsidies. They are providing the capital. Rural godowns, there is a prevention of distressed sale of food grains and other agricultural commodities immediately after harvest. So, immediately after harvest, the farmer is prevented from resorting to distressed sale. There is a reduction in quantity and quality of losses arising at present by storage in substandard places. So, presently when they are not storing, if in the absence of rural godowns, if they are storing in a substandard places, there is a loss in terms of quantity as well as quality of the produce, and that is prevented if rural godowns are created. There is a reduction in pressure on transport system in post harvest period. So, just after post harvest, we find that everybody is rushing for in search of transport system, the transporters to transport their produce. So, if part of it is stored in rural godowns, if they are able to store the produce in the rural godown itself, the pressure on the transport system is minimized. It also creates employment opportunity in rural areas, help the farmers in getting loans against the stored products, because any commodity which is stored in such infrastructural facilities, such godowns or such storage infrastructures, the banks also are ready to provide loans and against the produce which is kept in the godowns. Help in easy procurement of food grains by the Food Corporation of India, because for the Food Corporation of India, it is easy to lift the produce from one place. Next infrastructural facility as far as the storage infrastructure is concerned is the cold storage. Cold storage refers to refrigerated chambers for the storage of such perishable commodities as fruits, vegetables, fish, eggs, meat, dairy products. So, these are highly perishable commodities, and they need to be stored in a special kind of storage structures, and these are the cold storage structures. They come to the rescue, to the help of to store such highly perishable commodities. In these storage structures, the temperature is controlled and maintained so that the stored perishable products may not deteriorate in quality. So, the temperature is controlled and it is maintained so that the quality of the produce is not deteriorated. As I was saying, the cold storage, the temperature is maintained and it is maintained in the range of 1 to 10 degrees Celsius, and there is another concept, that is the freezer storage, where the temperature is maintained at less than minus 1.1 degrees Celsius. So, suppose a product demands a frozen environment, then for such products frozen storage is there, freezer storage is there, and this as in the case of CWC, we know that it is providing helps in the price stabilization. So, here again it helps in price stabilization of perishable commodities by removing gluts in occurring in production season. Cold storage also helps in widening the market for the products, lowering the marketing cost, raising the price realized by the producer, and lowering the price for consumers, and ensures that the products are available throughout the year. So, such storage infrastructures, they also help the consumers to get the commodities at a lower price. It is not only that the producer is getting at a higher price, producer is able to realize a higher price for its product. The consumer also in turn realizes he is able to avail the commodities, he is able to take the commodities at a lower price. It has made possible the consumers to live a greater comfort. So, since the consumers can reap the benefit of, they can consume the commodity, perishable commodities for a longer period of time. They can, therefore, it helps the consumers also to avail such commodities. Next, let us learn about the crop insurance, which is another very important aspect, as well as this helps in minimization of the risk which the producers face. And crop insurance is one tool, as against the storage, where after the harvest is done, in order to minimize the post-harvest losses, the cold storage infrastructure or storage infrastructure is important. The crop insurance helps in helps to minimize the risk during the production phase. There are a number of types of risk and uncertainty which the farmer face: the production uncertainty, price uncertainty, technological uncertainty, and those caused by other business and people. So, production uncertainty we know is because of the variation in weather, because our production agriculture depends very much on the weather, and therefore, weather variations like rainfall, temperature, etc. affects the production, and some years we find that there is a good harvest, and in some years there is a bad harvest. So, in order to minimize, this is what is the production uncertainty. Price uncertainty is the realization of price. Sometimes whenever there is a glut just after the harvesting, there is a severe glut in the market. Whenever the good product has come in the market in a particular year, good produce is there, good product is there, good production is there. In those years we find that the farmers are realizing a lower price. So, that is what is price uncertainty, and certain other years they realize a good price. So, this is what is price uncertainty. Can we minimize these uncertainty through certain mechanisms? So, crop insurance is one such mechanism to such strategy to reduce the risk and uncertainty existing in the production of commodities, agricultural commodities. There are various other strategies to minimize risk, that is the reserves, use of reserves, that is the money which is saved by the farmer, that can be utilized in such eventualities to overcome such risk. Hedging is another one, wherein we hedge the commodity during the production phase, we hedge the commodity and against the production risk as also the price risk. Then diversification, enterprise selection. So, we choose such diversified commodities so that during the production period itself, part of the land is allocated towards such commodity where the risk is more, and part of it is allocated to such commodity where the risk is low, so as to balance the risk. And flexibility is another one. Producing a stable and dependable income is another one. Then finally, the insurance is one of the most important strategy to reduce risk and uncertainty, and that is what we are going to study during this period. Insurance is a contractual arrangement by which a large uncertain loss is transferred to another individual or agency for a small known cost called the premium. So, we know that insurance involves premium, and the premium has to be paid by the person who insures himself, the farmer who insures himself, and there is an agency in our country for crop insurance. We have the Agricultural Insurance Corporation, which manages the crop insurance programs. So, the risk is transferred to crop insurance agency, the agency which is implementing the scheme, for a small known cost, that is premium, and large risk, the production risk in an entire district or entire state, the risk is transferred to the agency for a known premium cost which has to be paid by the farmer. This is what is insurance, and it involves a contractual arrangement. So, a contract has to be signed between the insurance, the farmer and the insurance agency. As far as the insurance is concerned, the first scheme is the pilot insurance scheme, which was launched in the year 1973, and this was by the General Insurance Corporation, and it was started in Gujarat, and that too for a commodity cotton, and later on it was extended to West Bengal, Tamil Nadu and Andhra Pradesh, and it was operational till year 1979. So, this was way back in 1973 that the crop insurance scheme was started on a pilot basis, and that too for a selected commodity. Then area based crop insurance was implemented by GIC in 1979, and this was again on pilot basis, and in this the indemnity is payable to all farmer borrower if the average yield of the crop in an area is less than the guaranteed yield. So, there is a guaranteed yield is defined, and if the yield falls below the guaranteed yield, then all the farmers in the region is liable to be paid the indemnity, whether the farmer has suffered the loss or not. The sum insured in this case is 100% of the crop loan. So, the farmer whatever he has loan he has taken, so that is the sum assured. So, that much of insurance is done, and ceiling on payment of indemnity for dry land was rupees 5,000 and for irrigated area it was 10,000. So, that was the maximum limit of indemnity which is payable to the farmer in case of loss, and this was implemented in 12 states up to 1984. So, this was a widespread scheme, and it was launched in the year 1979. Then next scheme is a comprehensive crop insurance scheme. This was implemented by GIC in 1985 and in all the states. So, this was the area was the entire states of the country, all parts of the country. All farmers availing crop loan were part of could reap the benefit of this program, and the commodities which were for which this scheme was meant was rice, wheat, millets, oilseeds and pulses. So, these were the select commodities for which this scheme was there, and only the farmers who are cultivating these commodities could take the benefit of this, could insure themselves, and premium was defined, that is 2% of sum insured in case of rice, wheat and millets, and 1% of sum insured in case of oilseeds and pulses. This scheme provides financial support to farmers in the event of crop failure due to natural calamities. And another benefit of this scheme is it restores the credit eligibility of farmers after a crop failure. Suppose a farmer has suffered a loss in a particular year, he is able to take credit or take loan in the succeeding year, because otherwise the banks will not give the loan once the crop has failed and he is unable to repay the loan, past loan, the bank will not come forward to give the loans. But if he has insured himself, he is able to again take the loan. To support and stimulate production of cereals, pulses and oilseeds, because once you have insured yourself, you are assured that you are not going to suffer loss as a result of any eventuality, and therefore you use right quantity of and right doses of and right quality of inputs and to realize higher production. The limitations of the CCIS was that the beneficiaries were only borrowers of crop loans. So, we know that large number of farmers, they do not have access to borrowing, and therefore, such farmers, they are left out of the purview of this crop insurance, and vast majority of farmers who do not borrow from financial institutions are out of reach. Farmer paying same premium and same indemnity is not scientific. So, this is another drawback of this scheme which is stated, and covers only specific crops. So, as I was saying that there are select commodities which are coming under the purview of this scheme. Therefore, another scheme was launched, that is the National Agricultural Insurance Scheme, and this was started in the year 1999 to 2000 in Rabi, and it replaced the CCIS scheme, that is the Comprehensive Crop Insurance Scheme. This was again implemented by GIC. Objective was to protect the farmers against loss on account of natural calamities, and there were a lot of things which are coming, that is drought, flood, hailstorm, cyclone, fire, pest and diseases, and this again restores the creditworthiness of for ensuring season. So, the ensuing season, that means the succeeding season, the farmer is able to take credit from the financial institutions or the banks. Here this program is meant for all the farmers regardless of their landholding or indebtedness, whether a farmer is having land or not, whether he is indebted or not, whether he has taken loan or not. So, regardless of that, all the farmers can avail the benefit of this scheme, and as far as the crops are concerned, all crops are coming under this scheme, that is the scope of these commodities or the crops has been expanded in this case, and large number of commodities have been brought under the purview of this scheme. So, the farmers who are cultivating any of these commodities could take the benefit of this insurance. They can insure their commodity or their crop. Approach is again area approach, that means if the yield falls below the guaranteed yield in a particular district or block or in a village, so the entire farmer in that region is liable to get the indemnity for that commodity. The premium rates were defined, that is 3.5% of sum insured for bajra and oilseeds, 2.5% for other kharif crops, 1.5% for wheat, 2% for rabi crops, and subsidy was also provided 50% to small and marginal farmers. So, as far as the premium is concerned, so the small and marginal farmers need not pay the entire premium, only 50% they had to pay. So, this was the kind of subsidy which was built in this program in order to facilitate the participation by small and marginal farmers. Then another scheme, very innovative scheme which was launched is the Rainfall Insurance Scheme, and this was launched by the ICICI Lombard and World Bank and IFC. So, three institutions together launched this scheme. This was launched in Mahbubnagar district of Andhra Pradesh through an NGO, that is the KBS, and it was started in the year 2000, and they sold to 174 groundnut farmers and 76 castor farmers. So, the two commodities were chosen, and the number of farmers were selected to whom the scheme was sold, and this was limited to crop loans given by KBS. So, those farmers who availed the loans from the KBS were the beneficiaries of this scheme. Insurance is payable if the cumulative rainfall during the period falls below the historical average. So, what has been the historical average last 10 or 20 years, what has been the average rainfall in that particular region. So, if the rainfall in that particular year falls below that, then the farmers are liable to get the indemnity benefit. And the rainfall index was created by assigning different weights to rainfall during different periods, because different period of the crop, different rainfall is needed, and therefore, based on that the requirement of rainfall, weightage was assigned, and then the rainfall index was created. The payoff increases with increase in severity of loss. So, the more severe is the loss, more is the payoff to the farmers, and this is how this scheme was is operated, and this was implemented on a pilot scale. The disadvantages of this product is that the nature of product is complex and is not easily understandable, because the rainfall index, the farmers may not understand what is the historical average, and data on rainfall is needed, for which they depended on IMD observation, which we know there are limitations to this. Subsidies offered by the government to public insurance schemes offers disincentive for private players to enter this sector. So, this scheme was launched by the private institutions, and since the government programs, they have subsidy element built into it. So, that comes in the way of implementation of such innovative schemes. Advantages is it gives scope for public private partnership in extending insurance service. Poor coverage of public insurance policies gives a scope for private players to enter in this sector, because we know that very few farmers have the access to insurance program, and the government is trying to increase that number of farmers who have availed the benefit to 50%. So, it is the private players who can chip in, and they can play a major role in providing the crop insurance scheme to the farmers. Offers a scope for use of latest technologies, that is GIS, remote sensing, etc., to assess the extent of damage in particular area, because rainfall insurance very much depends on the technological innovations like GIS, use of GIS, remote sensing, etc., to assess the extent of loss. Then another scheme which was implemented was farm income insurance scheme, because the other schemes, they protect the income from the particular crop, whereas here it is the income which is assured, provides income protection to the farmers by integrating the mechanism of ensuring production as well as market risk. Where in other commodities, other schemes, it is the production which is assured, whereas here it is the income which is insured. The farmer's income is protected. The scheme was implemented on a pilot basis in 18 selected districts. It is a strictly crop insurance, income insurance, and not farm income insurance. The indemnity calculation is modified to account for income shortfall. The latest scheme is the Pradhan Mantri Fasal Bima Yojana, which covers all food grains, oilseeds, and annual commercial and horticultural crops. One rate, one season for farmers, and all risk of crop cycle, risk of preventing sowing, risk of standing crops, and post-harvest losses are covered under this. So, this is one of the most innovative scheme, Area approach is adopted for widespread calamities. Adoption of latest technology, in even drone they want to use to assess the crop loss through under this scheme. If we want to sum up, then we see that the crop insurance is a method to provide a stability of farm income, induces the farmers to adopt improved package of practices, as I was saying, because he is assured that he is not going to suffer loss even in if the production loss is there. Therefore, he will use maximum of inputs. A number of programs have been launched to extend the crop insurance program to large number of farmers and to make it more effective and efficient. The Pradhan Mantri Fasal Bima Yojana is the most latest and most innovative program, and it is the most efficient program. The crop insurance program was started on a pilot basis in the year 1972, and there is a vast scope for the private institutions to extend insurance to the rural sector, and they can come in. Large proportion of countries' produce is lost due to, we also see that the large proportion of countries' produce is lost due to poor post-harvest facilities, and the storage infrastructure needs to be improved. Apart from the insurance which minimizes the risk in production, the storage facility is important to minimize the risk after the harvest is done. There is a wide gap in the availability of and the need for storage structures, paving the way for the entry of private institutions. As in the case of crop insurance, here again the private institutions can play a major role in providing the storage infrastructure and to minimize or to maintain the quality and quantity of the produce. So, thank you.